In the ever-shifting landscape of our nation's economy, a subtle yet profound divergence has taken root, carving a fissure through the very fabric of American society. It's a chasm that separates the stock owners from the non-owners, a divide that transcends mere financial stratification and speaks to the very core of how we perceive and experience the economic realities that shape our lives. The University of Michigan's Consumer Sentiment Index offers a window into this rift, a monthly barometer that captures the prevailing mood among Americans regarding their financial prospects. After bottoming out in the depths of 2022, this gauge has shown signs of recovery over the past 2 years, clawing its way back from the abyss. But beneath the surface, a more nuanced tale unfolds, one that reveals a stark contrast between those who have a vested interest in the stock market's fortunes and those who remain untethered to its fluctuations. The data paints a vivid picture. The top one-third of stock owners have experienced a sentiment surge of 71% during this period, a staggering 6-fold increase compared to their non-shareholding counterparts. It's a surge that mirrors the S&P 500's meteoric rise of nearly 50% over the same time frame, a correlation that cannot be dismissed as mere coincidence. For those who own stocks, the rally has been a cause for celebration, a testament to the enduring resilience of the American economy and the promise of prosperity that lies within its intricate machinery. But for those on the outside looking in, the narrative is starkly different. They feel left behind, excluded from the spoils of this economic resurgence, as if the benefits of this recovery are being denied to them, leaving them to watch from the sidelines as others reap the rewards. The gap between these two groups is now the second widest it has ever been, dating back to 1998, a chasm that speaks volumes about the divergent experiences of Americans navigating the same economic landscape. As the University of Michigan's Consumer Sentiment Report bluntly stated in July, rising stock markets benefit consumers with stock portfolios but leave behind consumers who do not own stocks. This sentiment spread between large stock owners and non-owners has followed a predictable historical pattern, one that mirrors the ebb and flow of market fortunes. In times of prosperity, like the past 2+ years, the divide widens, a stark reminder of the disparities that exist even in times of apparent plenty. Conversely, it is during periods of extreme market weakness, the dot-com bubble burst, the global financial crisis, the COVID-19 crash, and the recent Fed rate hikes, that the sentiment of non-stock owners briefly surpasses that of their shareholding peers, a fleeting moment of parity amid the turmoil. The dynamic is evident in the chart that accompanies this piece, a visual representation of the diverging optimism that has characterized the recovery since the 2022 low. The red line, representing the top third of stock owners, has outpaced the overall index and the sentiment of non-owners, a vivid illustration of the divide that has taken hold. As we look ahead, the trajectory of the stock market and, by extension, the sentiments of its participants hinges on a multitude of factors. The pace of expected rate cuts by the Federal Reserve, and the degree to which those cuts will stimulate an economy grappling with both inflation and a tight job market, will undoubtedly play a pivotal role. Much also rests on the ability of titans like Microsoft and Alphabet, the vanguards of the artificial intelligence revolution, to translate their substantial investments into tangible profits, a testament to the transformative potential of technological innovation. Yet, should any unforeseen event transpire to derail the currently bullish market forecast, we can expect to witness a corresponding decline in the sentiment of stock owners, and a tightening of the spread that currently stands at near-record levels. For in the end, the fortunes of these two groups are inextricably linked, bound by the invisible threads that weave together the tapestry of our nation's economic life. In this great American experiment, where the pursuit of prosperity is enshrined as an inalienable right, the tale of stock owners and non-owners serves as a poignant reminder of the complexities and contradictions that underlie our shared journey. It is a narrative that challenges us to confront the stark realities of inequality and exclusion, even as we celebrate the triumphs of innovation and resilience. As we navigate these turbulent waters, it falls upon us to seek a path that bridges this divide, one that ensures that the fruits of our nation's economic progress are not the exclusive domain of a privileged few, but rather a shared inheritance, accessible to all who call this land their home. For in the end, it is only through a collective embrace of opportunity and a steadfast commitment to equity that we can truly realize the promise of an economy that works for all Americans, regardless of their station or circumstance. In this ongoing saga, the story of stock owners and non-owners is but a single chapter, a microcosm of the larger narrative that defines our nation's economic journey. It is a tale that demands our attention, our empathy, and our unwavering commitment to forging a more just and inclusive path forward, a path that recognizes the inherent dignity and worth of every American, and that strives to ensure that the blessings of prosperity are not the exclusive province of the few, but rather the birthright of the many.